Well, out of all the presentations, I'm glad you landed on this one today. I was actually walking in and I saw someone that was starting to walk in and they saw cyber insurance and they just kind of turned away and walked around. So thank you for taking the time. It's a pleasure to be here today. What we're going to be talking about today is cyber insurance. So not only what has caused us to get to the point where we are, what's available out there, and more importantly, and something I want to stress throughout this, is how you can prevent it from happening. Insurance on all aspects of life should not be used as your primary I'm covered event. You should prevent the activity from happening, and insurance should be used as the last case resort, if you will. So please keep that in mind as we prepare through this, as we walk through this. Just a quick cap of who we are. I'm with Ollis Acres Arnie here in Springfield, Missouri. We were established in 1885 by the Ollis family. Back in 2015, we merged with Acres and Arnie down in Branson, so we now have 2 locations. We are one of the largest insurance and business risk advisory firms in the region. I just want to give a quick recap of the team. Myself, Derek Richardson, I'm going to be the brains of this presentation, and then Richard Ollis sitting in the back there. He's charmed, good looks, and he actually signs my paycheck, so I will continue to say really nice things about him while we're on camera. All right, so let's just jump into it. I showed Richard this presentation. He goes, who would put the brief history of insurance in a presentation of cyber insurance? And the answer to that is me. I am a self-diagnosed insurance nerd, so I need your help on this. If I get too technical, if I need your help. So if you have anything through this presentation, please jot it out. Brief history of insurance, how it kind of started, at least in modern era. We've got a cargo ship going from point A to point B. We've got some guys hanging out in a coffee shop. They go, hey, let's make a friendly wager to see if the ship will get from point A to point B. If it makes it there, cool, we keep the money. If it doesn't make it there, we'll pay for the resulting damages. What this ended up becoming is a shared pool of resources. It ended up becoming the Lloyd's of London, which is still around today and one of the largest insurance groups in the world. On the other side of the pond here in the United States, 1750s, fire. Fire was the #1 concern for business owners and homeowners. There's this guy, I don't know if you guys have ever heard of him, Benjamin Franklin. He and his group of friends were volunteer firefighters. So they go out, put out the fires, and then they're like, hey, we put out the fires, they've got financial damages, let's put together a pool of money, if you will. And they based this program on what the guys in London were doing to create the oldest insurance company here in the United States. So once again, kind of an evolution of events.
And what is the oldest insurance company?
I was hoping you wouldn't ask that. It's Philadelphia Commonship, I believe is what they call it. It's 1950s. They started it, they put it in a newspaper and they said, hey, we've got this idea, does anybody want to be interested in it? And within 3 months they had a well-established, well-working machine. They wrote 7-year policies. So you give them a deposit. If you go 7 years without a fire, you get that refund back less a fee. And that's how they ran their insurance company. By the 1970s, the climate started changing, specific to liability. The question was, if we've got someone that's well-trained, we entrust them with, in this situation, our physical well-being, what do they owe us in return? So liability claims started increasing. And why I bring this up specifically, medical malpractice in the 1970s, nobody knew how much you could sue a doctor for medical malpractice. Insurance carriers began to change their policy forms to be more conservative. We saw from the policy forms going from an occurrence basis to a claims made basis, and a lot of companies exited the marketplace. So you see events out in the communities and in the environment changing the insurance industry as a whole. So let's talk about modern times, the things that change our industry today. The big one here is the Sony PlayStation hack. How many of you are familiar with this hack back in 2011? So what had happened, essentially just a quick timeline, April 17th to 19th, there was some sort of intrusion. Nobody really knew what it was. There was something that happened, and they were trying to figure it out. So by April 20th, Sony suspends their network. Can't use it, not going to give you an explanation, that's it. By May 2nd, so almost 2 weeks later, was the time it took before Sony said anything about the intrusion. And they said, something happened, we don't know what it is, for your security we stopped it, we'll figure it out, we don't think there are many accounts that have been compromised. By May 14th, they did a forensic investigation and determined that they could start beginning to put services back online, country by country basis. So here's what we found from that incident. The service outage was 23 days long. So 23 days long, Sony was making $0 on their online services. Those couple accounts ended up being 77 million accounts that were compromised. And after the fact, Sony estimates that it cost about $2 billion. And we're talking about restorative damages, punitive damages, governmental entities, fines, penalties, etc., and lost revenue. So a big thing too is the class action lawsuits. 65 class action lawsuits were filed against Sony for this apparent hack. And then also what was kind of unique to this case, governmental entities started challenging what do major corporations owe when they're entrusted with our data. So here's a quote that I like. This is from a Canadian plaintiff. They said, if you can't trust a huge multinational corporation like Sony to protect your private information, who can you trust? And that's a great segue into the change in determining who is liable for what. Not only was the whole world watching to see what the parameters are going to do, but the insurance community was also trying to validate who's responsible for what. So Zurich American Insurance was one of the many insurers that insured Sony Corporation of America. Basically what they did is they sent Sony to court, the New York Supreme Court in this case, in February 2014 to determine, does our policy respond to a claim in which coverage was not afforded, or at least that's the argument. Without getting too technical, Sony essentially says that under the commercial liability form, which provides liability coverage for property damage and bodily injury, the personal and advertising injury section would afford coverage. So essentially, with that, I'm trying to keep my nerd out of this. Basically what it says, if I have information and I misuse that information, whether it be through media, libel, slander, my policy is going to afford the defense coverage. Well, the court decision ultimately said, the judge in this case said, that the hacker was not a named insured under Sony's policy. So the commercial general liability, which was providing coverage for Sony for negligent acts or liability to a third party, Sony didn't cause the hack, the hackers did. And under this policy, the hackers were not a named insured, obviously.
So what if it was an employee?
That's a great question. If it is, at the time, the policies did not explicitly say what they would or wouldn't do in those claims. So if it were an employee, if they could determine that Sony was liable or did cause that claim internally, the court could have ruled differently. And that's where we're getting to our next section. I want to point out specifically, this case started in February 2014, and it was resolved in April 2014. ISO, which is kind of the governing body or the backbone for the insurance industry, they essentially create standardization of policy forms. What they did, remember those dates, 4/14, up there on the top it says the edition date, May 2014, 1 month later. ISO puts this is one of the many exclusions that was included under the general liability form that says, hey, listen, if you have access or disclosure of confidential personal information, we're off the hook. Nothing in regards to this. So it's specifying the court case was this, our policies are not underwritten to cover this loss, you're on your own. Very, very black and white. While prior to that, because there wasn't events, it was somewhat gray, to your point. So what this did, in my opinion, was two very, very distinct things. You have the exclusion, but then you also have opportunities. The insurance carriers were not charging for this exposure, but now they could. We're explicitly excluding this. We're going to get into it. So what happened was many insurance carriers began to get in the market to cover cyber liability claims. The difficulty with that is, we'll talk about just real quickly what cyber insurance looks like today. ISO that we talked about before, the standardization of insurance policy forms, says nothing about cyber insurance policies. So there was at first, I believe there were 30 that originally got into the market. Now there are thousands of insurers that offer cyber liability. And the difficult part is there's no similarities between those policies. It's kind of a wild west, in the gold rush. Everybody just kind of did what they could to get by. This is the same thing as insurance. Did anybody see the Warren Buffett interview that was recently done? It was kind of interesting. He was speaking specifically to cyber liability, of course. Warren Buffett, Berkshire Hathaway has many insurance companies. Warren Buffett warned that his companies will not be pioneers in cyber liability insurance because nobody really knows what they're insuring. So if there is a large catastrophic event, Warren Buffett predicts that it will essentially destroy those who are big players in the cyber insurance world. So that's kind of terrifying, and it just kind of reinforces the fact that there are very little commonalities. So with that being said, it makes it difficult if you've got a couple different policy forms for insurance professionals like myself to compare and analyze those because they're so vastly different. Any questions, comments, concerns on that before we move on? Talking really fast.
So under regular banking bond, you do have data processing coverage. So if you've outsourced to your core provider, and
Yeah.
they get hacked,
Right.
I'm covered through.
Potentially.
It will. That's always the question.
Yeah.
Which policy is that going to fall under?
Yeah, and we're going to talk about that in a little bit more detail. There are a couple things that come into play with that. One is what legislators say. Once again, going back to that Sony cyber attack, governmental entities, regulators are trying to determine who's liable for what, and so unfortunately, state by state laws typically regulate who's responsible. So I'll kind of jump the gun real quick to talk about your question. Missouri, we've got the Missouri red flag laws, which indicate the person who input that information is ultimately liable for the safekeeping of that information. So we'll talk about how contracts can come to play in those particular examples. So going back to cyber liability, policy forms titled cyber are not necessarily cyber coverage. And we'll talk about that in a little bit more detail later. But just because you read in your policy, it says cyber, it says data, it says identity, whatever the case may be, it might not cover the exact same thing. Cyber insurance is changing fast. I just went from the 7 predictions of cyber liability claims, and that'll terrify you. But the exposures that we have out there are constantly changing. So insurance companies are trying to keep up, both from a pricing standpoint and also from a coverage standpoint. So with that, I'd like to at least set a baseline of the coverages that are typically available, and then we'll get into what we call the throw-in coverages that are automatically included under your policy versus a comprehensive policy specific to cyber liability. So the common characteristics, usually they provide 2 different distinct coverages. The first is third party. So that's that liability portion. I lose your data, I'm ultimately liable in the event that you bring suit against me. That's the easiest way to explain it. First party expenses are the expenses that you sustain for a breach of information. So that could be notification and credit monitoring expenses. As we talked about before, each state requires a little bit different notification expenses, credit monitoring services for up to a full year, forensics and legal expenses, how to determine where the loss occurred and how to prevent it from happening again. Ransomware, lost profit and loss of reputation are generally included under that first party expense coverage. Now, 2 differentiating factors or policies are the throw-in coverages is what we call them. Basically, some insurance carriers are offering just kind of a built-in coverage. It could be sublimited in the commercial general liability policy form. But normally we see these being either free or very minimal premium charges, say $250 a year for a business policy. They're sublimited to around $50,000, and they're usually that third-party expenses. So somebody brings suit against you. There's no or limited coverage for those first-party expenses. Now then there are more comprehensive programs and everything in between the spectrum. The comprehensive programs, what's a little bit different than the throw-ins, is they're written on a monoline or by themselves, or they're tied to other executive coverages. So the directors and officers coverage, sometimes the crime coverage as well.
Or a banker's bond.
There you go, or a banker's bond is very
Like we just heard.
frequent. Coverage also extends to privacy information in most cases. So we think about, I hate the word cyber because cyber seems to indicate electronic data. A lot of these policies are going to pick up privacy information. So that could be paper files. If you keep employee records in a file, God forbid there's a tornado like the Joplin situation that we had a few years ago, those papers are scattered, you have an obligation to notify those individuals in the event of that particular breach. Coverage for rogue employees, we talked about that. Not every policy covers the action of an employee. So I'll give you a perfect example. We had a situation in which a highly competitive environment, longtime employee, they decide that they're going to quit their position and go work for a competitor. Well, before they do that, they grab a bunch of paper records about the existing or prospects and they take it to their new employee. That is a breach of client information, and that is the acts of a rogue employee. So these more advanced coverages include acts of rogue employees. Regulatory defense, fines, and penalties, we'll talk about this a little bit more specifically. These these expenses continually increase. Social engineering coverage, that's the voluntary parting of funds. So I'll give you another example of what happened to one of our clients. We have a business owner that goes away on vacation. During the time he was on vacation, someone was able to compromise his email address. They sent an email that sounded exactly like the CEO saying, hey, I'm over here on vacation. I'm working with a business consultant. I need $30,000 sent over to me. This happens all the time in their organization. So the CFO, looking to impress the boss, does it very quickly. Wire transfer, it's gone. She calls up the CEO and goes, hey, I hope you received the money. And the CEO says, wait, what money? $30,000 down the drain. Now, under a traditional insurance policy, the voluntary parting of funds is not an included covered cause of loss. Under the social engineering coverage, it is. Does that all make sense? Okay. Some kind of soft or some indirect costs that come with cyber liability claims is the loss of income. Let's assume worst case scenario, you cannot operate your computer systems for a week. How many of you could survive that week? You might be able to, but you're going to lose some funds or have additional expenses that come out of that. So some of these forms are also including that loss of income. And then finally, most importantly, I was looking around, I invited a client here today and it happened to them. A nonprofit organization is walking out of their office with a stack of papers containing donor records. They step out the door, it was unseasonably windy, papers blew away. They say, what do we do? They call me, I say, we need to get you notified or need to send you to a qualified breach coach. They call the qualified breach coach, which is a licensed attorney in the state of Missouri to understand the regulatory compliance. They talk through it. They say you need to notify the individuals, you need to collect the documents you have, we need to quantify what records they are. Come to find out, the breach coach could determine that there was no additional steps that were needed, and their claim cost a total of $0.00. So these breach coaches that are included in a lot of these comprehensive programs can be invaluable when it comes to an incident. Yes, sir.
So because of the changing landscape that technology is experiencing, and so the changing landscape for this kind of coverage, are more of the policies written as claims made or occurrence?
Traditionally claims made. And that is, unfortunately, claims made, it's easier to retroactively take coverage away sometimes. So we're seeing a lot of that. I'm not saying taking coverage away, but we're seeing at each renewal, we're being notified of the changes that are going to happen before that renewal. I mean, that's the environment we're in. Is something that you bought 5 years ago might not be the same thing that you have today. Does that make sense?
Sure.
I haven't personally seen an occurrence form. Richard, have you? Okay, so let's get into the data real quick. Pulled this up. How many of you are familiar with this net diligence report? If you're not familiar with it, I would highly encourage you to take a look at this. Semantics and a couple other organizations get together every year to do this annual report. What I like about it is they are contacting the 15 largest insurance carriers that offer cyber liability insurance to really analyze the data. So you get real-time reports of expenses, different types of losses. And so what I did today, yes, sir.
Can I ask you a question? I'm probably a little different than most of these guys because I actually work in IT.
Okay.
But we have had an issue where in the past we've allowed people to connect their cell phones to our Wi-Fi network.
Yeah.
We have since segmented it, but if they get some sort of virus
Mhm.
and comes into our network, which we are pretty diligent about not letting that happen, but if it does, who's liable for that?
Great.
Is it the employee that connected it?
Yeah.
Or because we allowed them?
Right. Typically,
Because if you say the second part, I'm gonna blacklist everybody.
well, I would say go ahead and blacklist everybody. Excuse me.
Because they're getting on, they're getting on Facebook.
Yeah.
And then you get all these problems with Facebook about, things that are coming up and grabbing data and you just don't know what they're gonna do.
Right. And so the argument at that point is who has the greater degree of care? Does the employee cell phone to get on social media platforms have the greater degree of care? Or does the organization, in which could have a larger detriment to society, if you will, for a breach, more than likely that's going to fall on the employer more than it is the employee. And so we'll talk about that in a little bit more detail about what you can do. And one of them is drastically reducing the number of people who can access your systems. For example, our receptionist probably doesn't need her email at home. It's not really relevant to her job description. So being able to limit those exposures can.
Yeah, we do, but we've kind of gotten into, prior to me taking over, that people have allowed, just the receptionists to come in and connect their cell phone.
Right.
So they don't use up
Yeah.
the data.
Yeah.
Well, that's not our responsibility.
Right.
But with that, once we allow them to connect to the Wi-Fi, then we open ourselves up to whatever
Mhm.
their phone's gonna get.
Mm-hmm. Yeah. Right. Yes, sir.
I work in IT, IT person in banking. With the Wi-Fi, we give them a notice, a piece of paper,
Yeah.
that they sign waivering that we are not responsible if, and the Wi-Fi's on a whole separate segmented network,
Right.
that if they get something done, if their account gets, hacked or whatever, or if they do something that's not our liability, it's not our
Mhm.
fault, but, and that's how we deal with the Wi-Fi, because we allow our employees to use it to test products and all that, but then also they can
Mhm.
use it to surf the web, but it's its own entity, and we tell them
Right.
it's not regulated, it's not, secured,
Right.
we're not responsible for your time.
Yeah. And then we do something very similar in today's environment. If you have guests that come to your location, not having a guest Wi-Fi, that it's kind of a marketing suicide, if you will. But if you can separate those, to your point, the guest Wi-Fi.
I do have them separate, and they do get on the gas, which drives them straight to the internet.
Mhm.
But you are still, traffic is still coming in and out of the firewall.
Right.
And firewalls are, they're as secure as they can be, but
Right.
there's holes and
Sure.
so people can get in. So the likelihood of something actually happening is not very great.
Mhm.
It only takes one.
Exactly right. Exactly right. I agree with
And
you.
I'd rather just them not be on my network.
There you go. Sometimes that's easier.
So I'll go tell him that you said.
Hey, be easy. Yeah, my name is Richard Allis. Once again, if you'd like to plug that. Going back to the net diligence report, this is the report from 2017, which is the latest. Why I bring this pie chart up is there's kind of a misconception. If I'm not in the healthcare or the IT world, I'm not a subject to hacking. This chart does a really good job of saying otherwise. We used to say, cyber liability if it happens. Now we're saying cyber liability when it happens. Nobody's protected anymore. I don't know if you can see too much of that. Professional services, retail are kind of the higher ups, but financial services, healthcare are still remaining at the top. This chart shows the cause of loss. There's no changes there. Hackers are the #1 causes of loss. But if you kind of pair up all this other data, it seems to allude to human error continues to be a huge issue. So one of the things that I want to specify, I don't care who you use for your IT services. You can have a castle security system, but if you have one employee that clicks the wrong link, the whole thing goes kaput. So keep that in mind. Just because you have good policies and procedures does not mean it can't happen to you.
Derek, is this from my story? Is this the place that I'm supposed to speak up?
If you want to.
Well, as he said, he's the brains and I'm the one that clicks on the link. So I'll tell you my story. As Derek just mentioned, about 30% of the things that we see go wrong are firewall related. The other 70% are employees or other people clicking on things, opening attachments, or doing things with your system. And so I'll tell you my story. I get a Dropbox request from someone that I had been visiting with about doing some business together. And so it seemed logical to me when I received it that now they didn't tell me it was coming. Error #1, right, on my part. They did not tell me it was coming. Error #2 on my part is that I did not pick up the phone, in other words, offline, not email them, but offline, and ask them if they sent me something. However, because I'd been talking to them, I thought, hey, they're sending me this request. I click on it. It immediately attacks my inbox and starts sending out Dropbox requests from me to all of my contacts in my Outlook. Fortunately, I had someone that called me and alerted me about, I'm going to say about an hour into the event. And fortunately, in about 2 hours, we have cyber liability insurance. We called the carrier, they got us connected with the cyber coach. We got the system shut down. We were able to do a forensic investigation. We were also, and I mention this because I think it's important, the real value that we got out of our cyber liability policy are a couple of things. One, the cyber coach was able to guide us through exactly what steps to take. And more importantly, because it had got into my Outlook, I was really concerned that you all possibly were getting this, and I wanted to send something out explaining what had happened, and frankly, kind of a little bit apologizing for it, right? And so they were able to guide us on how to send that out and what to say and what not to say as far as that communication goes. So, and fortunately between our cyber coach, and I'll put in a plug for JMark, they were able to help us get this thing quarantined. But I will say this, a lesson learned for both myself, our staff, and frankly the importance of really training staff and others on a regular basis. I had been trained once about clicking on links, Now we go through quarterly
Mhm.
training with a company J-Mark recommends. I'm not plugging it, I'm just telling you what we do. Know Before is the name of it. And it's good, and it's a real good reminder on what to do and what not to do. So I only tell you that story, and we have other stories from other clients, but it's a personal story about what can happen, and frankly, these things, as Derek said, it really, it's not if, it's when, and the key is when it does happen, that you're able to identify it, to get the right help effectively and promptly, and get on it as quickly as you can. So anyway, just wanted to relay that story. Hopefully it might help in some regard.
And as Richard has alluded to, the cost, the net diligence report breaks down the cost of first-party expenses, the expenses that you sustain, and then third-party expenses with the defense and settlement. So what I have done is I put the average, and this is a little skewed because the report has companies that have $0 in revenue up to $1 billion in revenue. So there's a lot of, the average isn't the best. So what we did is the median, the middle point. You'll see first party expenses, total expenses average around $35,000. But what I really wanted to bring your attention to is the third party expenses. What we're seeing continue to grow is not so much the damages and defense costs, I did something wrong to you, but the regulatory fines and penalties. That's the largest line item on that, and that continues to grow. So we'll talk about a specific example of what happened here in Springfield, Missouri. Concentra, do you guys remember this, hearing about this? November of 2011, some employees discovered that they had been broken into. And one of the things that the criminals stole was a laptop. Well, it just so happened that that laptop contained private client information, and it wasn't encrypted. And I will give them the benefit of the doubt. Well, I guess to say they had been in trouble before for issues of encryption, but I want to remind you that these people were victims of a theft. In 2012, the United States Department of Health and Human Services begins an investigation, and what they ultimately found was Concentra did not sufficiently implement policies and procedures to safeguard the information that they were provided. So in addition to the notification expenses, the credit monitoring expenses, there's the resolution amount. And in my opinion, pardon my language, that's key terms for a big ass fine. $1.7 million in addition to the other costs that they had to resolve that claim. And I will not make any sort of statement or anything like that, but if you Google this location here in Springfield, they'll say in bold red, this location no longer exists. I don't know if it's tied or not, but no longer in Springfield, Missouri. And then this is one of our claims examples that we had internally. We had a service organization back in 2016 was uploading their payroll information, and in that process, they were asked to authenticate their information. Well, they had never had to do that before. It was an automatic login. So they called their bank and they're like, this is kind of weird. And the bank then notified them, hey, I think you've been hacked. And what they've determined was there was an attempted compromise and manipulation of the direct report payroll. So they were taking that information, trying to modify it and send it to a different routing account. And I just wanted to give you kind of a brief rundown of the activities that occurred. Richard hit on our particular example, but the first thing is they reached out to us. We put them in contact with the breach coach and claims adjuster to determine the legal determination. They then determined that we do have an active claim, so we're launching a forensic investigation to determine what it caused. Through that process, they began notifying the affected individuals and monitoring the credit of those affected individuals. And another thing to make important, that this is a reimbursement form, meaning I, as the consumer, I make those payments as they go through. The the payments to the attorneys, the payments to the marketing representative, and then my insurance company reimburses me back for those qualified expenses. One thing to note that during this process, it was their busiest time of year, and it took them 7 months from the date they discovered the hack to the resolve of that claim to be done. And it cost $58,000 less than $10,000 deductible. So we're not looking at these big companies on the East and West Coast that have all the IT providers in the world. We're looking at here in the Midwest, small employers are being hit with these claims. Okay, so I just want to wrap this up. I think we're doing okay on time, I think, 5 minutes or so. What steps can you take to prevent a claim? And we've been talking about that already through this presentation. Know the risk. This is one of the most important things that you can do. What information do I collect and store? If you do not know that information, there are IT risk providers out there that can come in, penetrate your system, identify where that information is stored. So I'll give you a perfect example. We had a client that went ahead and did this. They found out that their receptionist had access to Social Security numbers of their employees. The scary part, this lovely older lady who'd been working for the organization for a number of years was then selling the Social Security numbers to the black market. They determined that, fired the individual, and of course then they had a cyber breach. So if you do not know your exposures, find out from that. One thing that I wanted to point out, we briefly discussed this, the contractual review. A lot of times one of the misconceptions we hear is, hey, I have the information, but I don't store it. I send it to a cloud, or I have an IT provider that holds it for me. I would encourage you, if you have those contracts, remember that thing that you scroll through and say, I accept the terms of this condition and move on? Read it. I had one particular client, thankfully they're no longer a client, they offered a service in which they routed their customers to a third party for payment processing. And they said, hey, if something happens, the liability is on them, right? Well, let me see the contract. The contract says, yes, we are ultimately liable. If we lose it, if we lose the information you've entrusted with us, we're ultimately liable, but we're only gonna pay you the cost that you pay us per year. So in this particular case, they were paying the company $24,000 per year, but they were processing 200,000 credit cards a year. So tell me, if 200,000 credit cards were breached, do you think that 24,000 is gonna make everything whole again? Probably not likely. So review those contracts. If you don't have a process, develop a process for someone who's going to review those contracts. There are people out there that genuinely enjoy doing that.
Are there any carriers who give like a discount to you if you've had an IT audit review or risk analysis and gone through that process?
Yeah, so a lot of the carriers we're seeing through the application process, a lot of the clients that aren't too familiar with the different safeguards that you can put in place, they'll use the application as a benchmarking report of what they should be doing. There's not an established credit, so if you do this, you get 10% off.
Right.
But that wholly determines what pricing and what coverage they're gonna provide. So if you do not do encryption of data, totally fine, but we're gonna exclude coverage on your cyber liability form, if that makes sense. So the availability and the pricing does come into play. Richard.
Derek, could I make one quick comment about contracts, and this could be a whole nother session, but I would really encourage you, centralize your contract review and signing process of contracts, and we are seeing more and more arduous things put in those contracts where we're seeing risk shifted from the party that should be accepting the risk to you when you sign it. And so I really encourage you, those are becoming more and more treacherous in the marketplace, and frankly more and more common, not only on cyber, but frankly in a lot of different instances. So again, the centralization where you get just a person or two that are reviewing and signing those contracts, and really looking at some of those provisions to make sure you're not taking on other people's risk.
No, thank you, Richard.
You bet.
Policies and procedures: establish a written data breach response plan, including disaster recovery. This can be kind of difficult, but the easiest way to determine if you use electronic data, what are you going to do if you can't access that for a day? What are you going to do if you can't access that for a week? What are you going to do if you can't access that for the month? Who are you going to call? When are you going to call them? What are their numbers? It doesn't have to be elaborate, but you should have something in writing, and you should communicate that with your staff. And you should test it. Darn straight you should test it. Only keep required records. If you contain confidential information, and we didn't define what confidential information is because it changes by industry, but it could be something as simple as an email address can be considered confidential information. Only keep the required records. Don't have that bin in the bottom of the desk that fills up and you dump, once a quarter. Make sure you do proper shredding techniques and that. And we talked about the portable devices. Only provide portable device access for the people who need it. Once again, the receptionist probably doesn't need access to your confidential files. Could be wrong, but in most cases. Employee awareness, this is where I think is probably one of the most important things. As we know, the majority of the claims that we're seeing are due to user error. So educate employees on emerging trends. We talked about that social engineering coverage. Or exposure rather. If you get a request, do an out-of-band verification. So a request comes in from email, you call that person. If somebody calls you, you send a text, whatever the case may be, to verify that the person you're talking to or is making the request is legitimate. Remain skeptical, that's obvious. So always challenge links before you click on it. And then most importantly, foster open communication. If I'm an employee and I clicked on a bad link, but I'm terrified to tell Richard Ollis because he's going to fire me if I do a breach, that's doing no one any good. Something that could be very, very small could turn into a big deal if we don't foster that open communication. Insurance, once again, it is not the solve. It won't solve the issue. It's a last case scenario. Big or small, start with something. So if it's more appropriate for your organization to kind of dip your toes in the water, get a little bit of coverage, a little bit is better than nothing. And then specifically to the CEOs, the presidents, the C-level organization, they should be involved, an active participant in the buying process for the cyber liability. A lot of times they'll kind of shove that off as a number on an expense report. It should be more than that. It should be talking about what your exposures are and what you can really handle from a deductible standpoint, from a coverage standpoint as an organization. It should be more on the strategic level than it is a line item on an expense. And then finally, I'll leave you with this. Business owners are really, really good at doing what they do. IT and security might not be one of those things. So put together a team of people that you know and trust and that can handle an event and the chance that it happens. The beautiful thing about, once again, going back to that breach coach, if you don't have those people identified, that breach coach can help you identify who those people are within your area. So that can include, of course, your IT service providers, the JMarks of the world, the insurance advisors, attorney that is specialized in technology and breach and regulation, and then PR and advertising agency is a good identifier too. A lot of times when these cyber claims happen, think about Target. Target's always going to have that kind of nasty loss of information tagged to them. So to have a PR advertising agency that's able to kind of help rebuild those reputational damages is always a good thing. So I think we are about out of time, correct? So I'll hang around. I know I'm between you and lunch, but if you guys have any questions, comments, concerns, look forward to talking to you. Thank you.